Hey guys, welcome back to the channel. In this script option hub video, we're gonna talk about order blocks. I think you've all heard about them. If you're an ICT trader or a smart money trader, you've definitely traded them once in a while. But there are some misconceptions and some wrong ways to do it that we're gonna discuss today. And for those of you who don't have any idea what an order block is, watch this video and you will learn what they are and how you can trade these order blocks and improve your performance. Okay, because I really love them, and if you do it right, you will have a great win rate in your trading. Okay, so let's get into it. First of all, an order block is, as the name suggests, somewhere that a lot of orders are stacked, mostly limit orders, and they're placed by the smart money or the large investors and institutional traders. Okay, so this is where they enter and shape the market moves. So we would like to enter with them and catch the move that they create. All right, so let's get to the chart and I will show you what an order block is right here. So first of all, we should determine the trend and market structure. As you see, the market structure has been bullish and trending higher rather impulsively right here. And then we have experienced a period of consolidation and correction, but it's not really impulsive. So the market is likely to remain bullish and go higher to hunt these highs, this high, and even this high. Okay, so here's our bias and we're looking for buys. Now, where should we enter? On the order block, on a bullish order block. Now, where's the bullish order block? The bullish order block will be the last couple or the last bearish candle before the last impulsive bullish move. So here's the bullish move we're talking about. And these two candles are located at the base of this bullish move. And these will be our order blocks, okay? But let's check if they're valid order blocks or not. For an order block to be valid, we should first have an impulsive move, which we have right here. And we should have a market structure shift or a break of structure, which means that the impulsive move should break recent highs. Okay, as you can see, the last prominent high we have is right here, and the price has traded through it, even this one. So this order block is likely valid. And one final thing that I'd like to point out is that if an order block is created during or after a liquidity hunt, it will be high probability. As you can see here, we had sell side liquidity and the market has traded through it and hunted all the stop losses and swept all the liquidity below here and then moved higher. So this makes our order block valid. All right, so let me specify where our order block is located. It will be these two candles, these bearish candles before the bullish move we got. And for entries, you can place your entry right at the high of the order block, or when we have a large order block, relatively large, you can put it at the 50% threshold of the order block, which will be right here. Okay, so you can also put your entry here, which I would like to do so to get a better risk reward ratio. And you can put your stop loss below the order block, but I prefer to give it a little bit of breathing room, so I will put it a little below it. And then for exit point and take profit, we can use this high or even this major high. And the reason behind it is that there's a lot of buy side liquidity resting above this high, so we're gonna target that and we're gonna expect the price to sweep this liquidity. Okay, so as you can see, we would have entered the trade if our entry was here or even here, and let's see how things work out. And there it is. This trade is a winner with a 5.6 risk reward ratio, which is a great one. And if you were able to catch 2 or 3 of these in a month and avoid overtrading, you will be able to have a solid, profitable month or even pass your Profit challenge. Now, there's another method, another more conservative method that you can use for entries, and it's to enter the trade after the rejection from the order block. And by rejection, I mean when the price tests the order block and then gets rejected and closes above the order block, which is this candle. And you can also put your stop loss below here, or you can use the recent low after the rejection, which will be right here. And it will give a 3.8R trade in this situation. Now let's take a look at another example for a bearish order block. As you can see, the chart has been choppy and the price has been consolidating. However, recently it has taken out major highs and major liquidity above these highs, okay? And then it has impulsively rejected to the downside, which is a clear signal that the market is likely to go lower now, because it has reached the targets on the higher side and it should now target sell side liquidity. All right, so back to our rules. We have an impulsive bearish move. We have broken structure with the price closing below these lows, all of them. And we have a clear bearish order block right here, which is the last bullish candle before our move. Right here you have again a few choices for entries. You can enter at the low of the order block and put your stop loss above it, or you can use the 50% rule, which will be right here. However, when there is a large wick in an order block, I like to consider the body of the candle as my order block area. So my entry will be on 50% of the body. All right, so I'd like to put my entry right here, and you can put your stop loss above the high, or if you want to be a little more aggressive, you can put it around here and above the next candle's high or the previous one's high, if it has logic. And right here it has, because in this area we're already above these highs and the liquidity above these has been hunted, so it can be a logical stop loss placement. And for the take profit, you can use this low or even these lows or these lows right here, okay? So I would like to get a quick win, so I would use the recent low, and this is already a great trade if it's profitable, because it gives a 4 risk reward ratio if we win. Okay, so let's see how this one pans out. Right here we get a beautiful entry, and note that the price has not been able to close above the 50% threshold of this order block, which is something we would like to see and something that validates our idea. It has only marginally wicked above it, okay? And then a massive rejection, and let's see how it goes. And boom, there it is. We have just caught a 4 risk reward ratio, and you can also continue with the trade and hold it open, maybe to target these lows or even this one. So let's see if these targets also get hit. And yes, there it is, a profitable trade with an 8 risk reward ratio, which is a great one. And with this trade alone, you can pass the prop firm challenge easily. So let's wrap up this video. As I've already told you, an order block is a place where there's institutional activity and interest to enter the market, and we would like to catch an entry and ride the move with the institutional traders and the big money. And that's the reason why most order block trades have high risk reward ratios, because they lead to impulsive moves. Now, I suggest that you take everything you've learned right here in this video, and also all other knowledge you have of order blocks if you have traded with them or seen how they work before, and create a basic strategy like this one, a simple one, and backtest it using backtesting softwares or even the TradingView replay mode that I've used right here. And when you have this strategy established and you have the data to back it up that it's profitable, you can apply it to demo accounts. And for CFD trading and futures trading, you can use the TradingView paper trading, or you can use the demo account that your broker provides, and which is mostly free. And for binary options traders, if you want to test your strategy in live market conditions and without risking any money, you can use the Pocket Option demo account, which I will leave a link to in the description, and you can easily sign up and register for free and use their free demo account with $10,000 balance. So as always, stay disciplined, don't forget about risk management, and happy trading.